OMG. Did the bull run just end? Did Donald Trump just kill it? We were all so busy looking at the charts waiting for the proposed Bitcoin strategic reserve that we didn't fully expect the extent of the wrecking ball of tariffs. It's currently doing quite the number on the markets. Now, we knew the tariffs were coming, but I guess the market didn't price them in. The tariff war is heating up and our crypto bags have been collateral damage to that. So stay until the end as we explore what this could mean for your portfolio. So President Trump, part of the reason why he won is because he promised to make America great again. MAGA, baby, woo! It's part of the plan, right? You see, tariffs are a weapon. They're a weapon that could be more powerful than sending an army into another country to compel them to concede and to do what you want them to do. With a few strokes of Donald's pen, the countries got slapped with some pretty big tariffs, 25% duties on Canadian and Mexican imports and 10% on China. Part of the reason here is to force these countries to do something that Donald wants to be done, particularly about illegal immigration, about fentanyl, some other issues too around unfair trade balances and all that kind of stuff. Now, according to a White House press release, this is also about addressing the $1 trillion trade deficit. Now, real quick before we dive deeper on this issue, if you are trading these markets right now, you're gonna need a great exchange to do that out. I recommend BitUnix, a no KYC exchange. No KYC, no VPN, no BS. Just click the link down below. Deposit, trade, you're good to go. All the top pairs, all the top coins, hot new altcoins listed all the time, and you can get a 20% deposit bonus by using that link. So you deposit $1,000, you get $200 back. So if you're trading these markets, you're gonna need a great exchange. Link down below to a great exchange. So how do these tariffs actually work? Essentially, they're taxes that get imposed on imported products. Now, this makes imported goods more expensive than local products, encouraging consumers, of course, to buy domestically. Sounds fair enough. By making imported goods more expensive, tariffs, the idea is anyway, is give local businesses a chance to shine. But with modern supply chains, so many things even made in America require things imported from abroad. It's like giving the local band a prime slot at the club, making the star of the night, while foreign bands have to pay to play. This will put the spotlight on locally produced goods, which is theoretically good for the economy. Even if short-term pain happens, long-term, its intention is to fix imbalances. The use of tariffs is not new in U.S. trade policy or in international trade policy overall. One example is the Smoot-Hawley tariff of 1930, enacted during Herbert Hoover's presidency. It aimed to protect American industries, but actually led to international retaliation. In contrast, Franklin D. Roosevelt's Reciprocal Tariff Act of 1934 actually reduced tariffs through bilateral agreements. This marked a shift towards much more open trade policies that essentially coincided with economic recovery from the Great Depression. Now, between 2018 and 2020, during Trump's first term, China and the United States engaged in a trade war. The war was the result of the Trump administration's efforts to force China to change its trade practices and its intellectual property theft practices.
China, I have to have my China.
Uncle Sam, or Uncle Don, I guess we could say, imposed tariffs of $350 billion worth of tariffs on Chinese steel imports, aluminum imports, washing machines, solar panels, and a range of other goods. Of course, China retaliated with its own set of tariffs against U.S. products. Now, these tariffs affected industries and consumers in both countries and also increased the price of about 2/3 of dutiable goods in the United States. Pretty damn big impact. The US, being the biggest economic powerhouse, of course, does have the upper hand in any tariff war, particularly against Mexico and Canada, maybe less so against China, but still has the upper hand. In 2023, it imported $3.17 trillion worth of goods, so the previous trade wars have always, by the way, ended in favor of the United States. It's the big boy. Trump's got all the cards. Because the US is, after all, the biggest consumer country and customer in the world. And as they say, the customer's always right. I know that it's debatable, but you know how it is. This time, it seems like Trump is hell-bent on imposing tariffs on its actually biggest trading partners. Canada, Mexico, China, they're literally the top three. And they're not taking this sitting down either. Prime Minister Trudeau has already announced retaliatory tariffs to counter Trump's actions. Canada will be slapping a 25% tariff on $107 billion worth of U.S. imports. I heard orange juice might become more expensive in Canada, along with a range of other goods, while Mexico is also preparing its own Uno reverse card here, setting off a trade war. And of course, China isn't going to take this sitting down either. China is also preparing its own counter tariffs. So everybody just ratcheting up the tensions, driving us to the brink. The question is, how does this affect, well, everybody and our crypto bags most importantly? Economists are saying that this will have a negative impact on U.S. consumers which have already had to go through a pretty few tough years. It is estimated that consumers' average after-tax income will decrease by 1%. Tariffs are additional taxes on imported goods that will ultimately be passed on to consumers at the end of the day, hitting middle and low class people the hardest. Since these tariffs are of course imposed on both sides, it doesn't matter whether you're American, Canadian, or Mexican. If you reside in one of these countries, many of the things that you buy regularly are going to become more expensive, because what happens in the United States happens to have global impacts. Problems there means problems for everybody. It sucks. Unfortunately, it's just the beginning. According to a study from Oxford Economics, a 25% tariff on Canada could actually trigger a broader recession in Canada specifically, and 150,000 Canadians could lose their jobs. So the pressure, of course, on the Canadian government to not let that happen. Now, I don't have the numbers for China and Mexico, but you can extrapolate that it's going to be problematic for them as well. Now, you might say it's just a Canadian problem, it's just a Mexican problem, it's just a Chinese problem. But we forget they are also importers of products from the United States and other countries. We also forget that these are some of the largest economies in the world. These four together, they're all top 20 economies, United States and China being 1 and 2. Just imagine what will happen if hundreds of thousands of people lose their jobs in these countries, maybe more. Consumer spending, of course, will also decrease. Tourism will decrease, and of course, really just all kinds of economic activity will start to decrease. Earnings for companies decrease, making problems for the stock market, making problems for crypto bags, and it affects all countries. When economic activities decrease, businesses take a beating. When businesses take a beating, they hire less people, everybody feels the crunch, they're likely to downsize workforces. If you don't have a job, you can't buy dog coins, okay? Simple as that. Consumer spending decreases, basically you get a negative feedback loop until you hit some kind of bottoming scenario. Now that can all lead to a lot of economic turmoil or even a US recession, which is generally bad news bears for markets. Now, when this happens, expect investors to flee from risky assets like crypto and seek the safety of cash, bonds, and gold. But is there any silver lining to everything going on right now? Maybe. You see, this could, at the end, of course, protect U.S. companies from competition, allowing them to create actually more jobs and strengthen the U.S. economy in the long run, even if short-term there's a bit of pain. More jobs means more money in the hands of consumers, aka more people to buy dog coins, okay? An increase in consumer spending stimulates the economy more broadly. Higher tariffs would also mean higher revenues for the government, which is good. You can use that to fund public services, infrastructure projects, creating more high-paying jobs, further stimulating the economy. Now, with a strong economy, people tend to invest again in risky assets like dog coins, or just, crypto more broadly, Bitcoin, all that stuff too. Also, a strong U.S. economy will also have a trickle-down effect on other countries. However, the outcome of all this is uncertain, and markets hate uncertainty. They really do. They really, really do. As you can see over the weekend, the uncertainty of what will happen U.S. equity markets this week showed up as in crypto as the canary in the coal mine. For all we know, the three countries could strike a deal with the U.S. and tariffs might stop, or it could escalate into a full-scale trade war. So how am I approaching this? Well, I'm not overly worried about Bitcoin. It's a long-term investment. It's going to outlast any presidency. It'll be fine. However, until we see some kind of direction on this, I will be a bit more cautious with altcoins. Obviously, they tend to be more volatile to bad news compared to Bitcoin. We still have a lot of potential for that Q1, Q2 bullish impulse, as we so frequently do see with seasonality of the markets, but that requires some kind of coming back from the brink. Dial down that high leverage trading until we get some kind of direction on the market and how this is all going to play out. Keep some stable coins, patiently wait for the tide to turn, okay? Good news will come. A strategic Bitcoin move could come out at any time, which would eradicate most of the bad vibes in the market. Zero capital gains tax on crypto for US crypto, that could be a major catalyst. Plus, even though equity investors are freaking out over tariffs, realistically, this is a negotiating tactic and a deal could be struck that calms the markets and up only resumes for, at least Q1, Q2. And that could happen like that. In fact, Trump is meeting with Mexico and Canada just today. So maybe this is all just some heavy-handed Donald Trump style punch in the face negotiating tactic. One thing is for damn certain though, Trump's back, man. It's going to be a crazy year in 2025. Hold on to your butts. Thanks for watching.